Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is October 18th, 2017, and today is Wednesday morning. So looking at the economic events of the day, we're going to start out at 10:10 a.m. I don't know who gets these time schedules. I'm not sure about the seconds, but it's 10:10 a.m. ECB President Draghi will be speaking, so that's going to surely affect the euro. We're going to look at that in just a moment. And then at 10:30 South African time, average earnings index coming out of the United Kingdom. And then in the afternoon across the Atlantic, 2:30, we're starting out with building permits. That's an important number. And then at 4:30 South African time, weekly oil inventories number that comes out. But let's see what's been happening in the markets. So we're looking here at the Euro USD. We're trading in a channel, okay? The upper limit is 118.80. The lower limit is 116.90. We're trading right now at 117.63 with not much conviction in either direction, okay? That's the honest answer. And, you know, we're below the 14 and 30-day moving averages on a short-term scale to look at the trading. But altogether, okay, we've had a tremendous rally since, let's say, the end of May, early May, until the end of August. We went over, you know, from 106 to 121-ish level, which is a colossal. That's 1,500 pips, okay? So, you know, the fact that we're trading sideways, you know, everybody's reassessing exactly where the euros is standing vis-a-vis the dollar, vis-a-vis the GBP. This is natural. Okay, very, very natural. So the fact that we're trading within these levels does not mean necessarily that we're going to retrace back to 115 or 110-ish level. It just means that, you know, everybody's taking its breath and the banks are understanding, you know, vis-a-vis inflation, vis-a-vis the interest rate decision. Also, the economy is very hot. So, you know, this is a much more trying time for central banks than when, you know, you have some sort of, you know, emergency or there's some sort of economic downturn. Because in an economic downturn, you know what you need to do. You just need to pump more money into the economy and make it more cheaper, and people will borrow more money, and, you know, the economy will be stimulated. But when the economy is doing well, and, you know, you have to make sure that inflation is kept in check, you know, how housing prices are not overblown, etc., etc. So it's a little bit more of a creative job for these central banks in these type of levels. So just keep that in mind. Looking at the GBP USD, a nice retracement this morning below this 132. Okay, we broke this based on the news yesterday. Governor Carney was speaking as well, and, you know, we're trading below this 132 between 131.79. Now, to say that this is going back to 130, not necessarily. Okay, so just keep an eye on this today. If we don't go further down, we may bounce here. You know, and we're you know, this is the same story as the Euro USD in a sense, where this was relatively stronger vis-a-vis the dollar versus the euro versus the dollar, but you see that it's changing here. The nature of it is changing because it's breaking down. So, you know, as before we weren't using this as, you know, your go-to short, this might now become your go-to short vis-a-vis the euro getting stronger. So take a look at this as this unfolds later today. Looking at the Aussie dollar, we had a nice rally up to 0.78 and we sold off. This is a resistance level, a support level before, but now a resistance level, as you can see here. So, you know, we're trading below this. If this does break this 14-day moving average, I believe that, you know, I would have more conviction to be on the short side to break it further down. But keep an eye on this as this develops later today. If it does break this 14-day average, it might be a good short. Looking at gold, we had a nice retracement yesterday from 1300 from the beginning of the week. We broke 1293, and that's your really go-to because that was a support level which was previous resistance, as you can see here that's times, where we had resistance, subsequent support, and then a failed support right here. And that's a nice indication that this would go further down. Now, if we are, you know, tugging along at the 14-day moving average, if we do break it, we can certainly see it get back to the 1270 level. Now, what's important to note here is that the equities are very strong, okay? And since the equities are very strong, the economy is very strong, you know, there's no fundamental reason okay, from a fundamental perspective, why gold should be rallying. Okay, it's usually a haven investment used for, scenarios where the economy is not doing well. So, with that in mind, it's really just geopolitical reasons that the rally of the gold is happening. Okay, so these things could change on a dime as we're breaking below this 50-point level on the RSI. So keep an eye on that as well. Looking at oil, we got to update the chart here. There we go. That's our oil chart up on the screen. We're trading at 52.29. It's had a resistance above this 53 level, as you can see here previously. If we do break this higher, we could definitely see it maybe close in at this 59.60 level. Okay, that was our resistance, and we look like we want to take it up higher here, making this higher high correctional move. On the basis that it's a bull flag, okay, making higher lows, okay. So this may really take off. So keep an eye on this today to see if there is some sort of impetus for it to go higher, especially we're now entering the winter months, usually rallying into the winter months into this time period of the year. Looking at the JSC, we finally retraced a little bit yesterday, okay, selling off from 52,529 to 51,066. Now this is really important, okay? Now today is really an important level because we've had this resistance previously on a shorter time frame, okay? Because we're only looking at a 4-hour chart. This resistance, and we broke it. If it doesn't hold this line, we could definitely see it correct itself maybe to 51,699. So keep an eye on this as well as this resolves itself later today, especially if we break this 30-day moving average. That's a real convictional move to show itself going down on the negative side. So keep an eye on this as this unfolds later today as well. Dow Jones hitting all-time highs yesterday, and we'll take a look at that. 23,000. Okay, so I need to say this again. We're up 5,000 points from when Donald Trump became president. Okay, I know that's been my mantra every day that I say it's been this much, how much he's been president. But this is unbelievable. I mean, looking at the monthly chart, this is as far as we can go down to February 2009. Okay, this is March 2009. I remember this point. Okay, I actually got long at this point. I didn't hold it this entire time, but it's unbelievable. We're up 15,000 points in 10 years, in less than 10 years. So that's an amazing move for the Dow Jones, historically speaking, for just 1 year to see us go so far up in such a short time period. Now this kind of, you can't avoid not being concerned when people's investments are getting larger and larger, and the stock market is going up higher. Now, we mentioned this earlier, that it's really hard to buy the pullback. There's no point here that you could say, okay, well, it's finally pulling back and now I could get into it. It's slowly going up. There's real buying here. This is what this implies. It means that there's real money being funneled into the markets. And if it's going at 23, guess what? If a guy is guessing or the guy is speculating, that's a more correct word, that the market's going to, if he's buying it at 23,000, he's not expecting to sell it at 23,100. He's even expecting it to go to 23,500. So, with this in mind, just keep that the trend is still your friend. Okay, that's the point of saying this. Now, I've mentioned it several times this week. There's until we don't have a confirmation this is going to go further down, we don't have it. Okay, now looking at the DAX as well, we hit 13,000, which is all-time highs, and we closed above 13,000. Now that's an important number because, psychologically finishing it off at 13,000 and closing above that number, which we didn't do in the Dow Jones, that might be an indication that the Dow Jones may still play catch up and the DAX is, regaining its reputation for being the leader. So, just points to ponder today when you're trading. But lots of things going on and lots of opportunities. This is Fred Razak. I want to wish you guys a great trading day. Thank you.